Also keep an eye out on commodities. Manisha is joining in. Manisha, good morning. So there's a trade deal, it seems. Finally, US-China talking. What's the latest?
Oh, well, yes, it's absolutely a risk-on trade happening right now, and that is the reason gold is not in favor. Having said that, gold prices haven't declined too much. Actually, when you look at the last 8 or 10 months, we've seen gold prices in one way, and it has seen corrections, but very far, few and short-lived. So prices are trading at below 3280 at this point in time. Remember, we've seen a 3500 of an all-time highs. So if you look at since then, prices have traded between 3200 to 3400 on the higher side. Markets waiting for some big news to come in before we can actually see prices go either ways. Well, the dollar index should come in on your screens because that clearly has strengthened to 100.5. That seems to be weighing on gold prices right now. And as you mentioned, it is going to be about the US-China trade deal where there's an expectation that there would be a joint statement from both the countries today, and the markets would be looking at details from that. As of now, from where we stand, it's 145% on China from US and 125% of a retaliation coming in from China. These numbers could go down considerably in the announcement today. Apart from that, what also is weighing on in case of the gold prices is India-Pakistan ceasefire. We did see some buying happening, especially in the Asian region in sense of physical markets because of this, but that seems to be low there. The volume's not too much to talk about in Asia. And then it also has to do with the US Fed Chair Powell testimony or speech coming in this week, and ruling out preemptive rate cut in response of tariff-related concerns is also weighing on in case of gold prices there. Interesting JPMorgan report on gold says that they're looking at higher prices from here on. By the fourth quarter, you could be looking at an all-time highs coming in yet again for gold. Next year could be 4,000. And by the time the US President Trump term ends, the gold prices could be at $6,000 an ounce as well. Interestingly, it's not just JPMorgan because most of the other banks and brokerages also have kept on with their high gold price forecast for this year and the next. None of them really revising it on the lower side. And that is about gold. But when you talk about risk on, and as has been the case with equities, metals, the crude oil prices also are trading on a firm note. 4% up in the previous week, and the prices have extended more gains in the Asian markets right now. The crude prices also will be looking at US trade-China deal. It's going to be about China exports for the month of April, which have been supportive. And China oil imports in April on an year-on-year basis have gained up by 7%. OPEC output also, when you look at that, has constantly declined, even as they're looking at increasing output. But Libya, Venezuela, Iraq output actually has seen a decline in the previous month. And then US sanctions on Iran is another thing that the street has an eye on. Lower crude output is something that has been supportive for the markets there.
All right, Manisha, thank you very much for that. So a lot to track in commodities as well, but broadly, like in equities and commodities as well, it is risk on. Now,